What's up traders, welcome back. So I've had lots of questions about my XXX model, and in this video I wish to break down the XXX model and explain to you how simple your trading can be if you wait for one key level, you understand buyers and sellers inside of the key level, and you only trade with order flow. So the 3-step model is designed to make your trading mechanical, emotion free and accurate using only fair value gaps and liquidity. So if we just take a look further into this model, right, we're going to be breaking this down. So why use a XXX model? So the XXX model uses 3 things, right? So every time you enter a trade, you need to know these 3 things. You need to know where you are trading from. So you need an accurate key level, which is nothing more than a 15-minute fair value gap. The next thing you're looking for is buyers and sellers. So you need to know the bid and the ask, right? Who is aggressive, who is passive? And that leads on to number 3. When you look for a buy, why are you buying and why are you selling, right? So when you buy, you need to know buyers are in control of the price. So you need passive buyers to be present. I'm going to break this down throughout the video. And if you want to sell, you need to look for sellers to be in control. So you need passive sellers to be in control. The difference between a trader and a gambler is a fine line. And that line is determined by, do you know why price is moving? And do you have evidence to suggest that the market is going to move in your favor? If you can answer these 3 questions of where you got in, what you look for, so buyers and sellers, and why you sold or bought, then it was a trade, right? So this is how I like to break down my model. So let's start with the first one. So where? So I never trade outside of my key levels, right? So if you're a trader struggling with patience, or anything like FOMO, revenge trading, any emotion that links back to simple discipline and patience, more importantly than discipline, if you have a pre-market plan with key levels, you follow that pre-market plan. So in this video, I'm going to show you how you can find and determine the right key levels that give you the best shot at getting the most accurate entries, right? So this all comes down to if-then statements. So once you have 1 or 2 key levels, if price breaks this key level, I will buy. If price holds this key level and breaks the downside, I will sell. Everything in trading is an if-then statement. So this is from Wednesday, the 1st of October, or whatever the date that was on that day. So Wednesday, the 1st of October. And I'm going to be breaking down my pre-market game plan. This was ES futures on the 15-minute time frame. So notice how I use 15-minute fair value gaps to form my pre-market game plan. So there's a few things I look for. So we had a key level from yesterday. I'm going to be breaking this down on the chart as well. We had a key level from yesterday. So I don't trade near the daily opening price. So this is the daily PO3 indicator, PO3 by 2 degrees. This is the daily opening price, which I've labeled in a red line. Now, from my experience, when price is at the daily opening price, it often chops around on the 5 and the 1 minute time frame. So I use the 15-minute time frame for key levels, and I use the 5 or primarily the 1 minute for my entries. Now, what makes this an accurate way to trade is that 15-minute fair value gaps are respected often with pinpoint precision. Now, the reason you don't capitalize on this is because you don't understand the where, the what and the why. So you don't understand order flow at these key levels. But what we can see here, if we zoom in, is that we have a 15-minute fair value gap here. So this was my key level. So for those traders who are interested, this was a key level that held from the previous week, end of September, going into the start of October. So we had a 15-minute fair value gap, and our job now is to understand what was going on in this market, right? So we're going to be breaking this down in terms of the trading view chart. So if I just bring up trading view here, what we had over here, so this was our key level of interest, right? So this was the main level I was looking at. So a couple of things to note from here is that we've had a sweep of the previous day low, right? So this was Wednesday. Now, the low of the week typically occurs around Tuesday/Wednesday. So we never know the exact day that's going to happen. Our job is to simply manipulate and time this with key levels. So we've had a sweep of the previous day low. So if I kind of zoom into this, we've had a sweep of the previous day low. And this was our Judah swing, or the low of the day. So I was anticipating this to be the low of the day, right? So if we get to this key level, I will anticipate this to be the low of the day, and of course the low of the week, right? So that's what I was looking at here. So here's our Judah swing on ES futures. So if I continue on with price, so what I'm looking for, this is what's interesting now, right? So if you're a trader who struggles with something I mentioned previously, right? So FOMO, revenge trading, any kind of emotion, you can fix a lot of your emotions if you simply had the patience to wait for key levels. So I've had questions about my key levels. How do I determine key levels? So key levels are one of the easiest things you can determine, and one of the most important things, right? So if I just zoom out a little bit, what we had was structure high and then structure low down here. So what made this a key level was this, right? So we had this fair value gap just over here. So this was a fair value gap that price respected once, kind of respected twice over here. we saw price flipping at this area. So we saw this acting as supply, acting as supply, acting as supply, also here acting as supply. So when we come into this area now, so I'm just going to zoom play price on a little bit. So when we come into this area now on the lower time frames, and we're going to be breaking this down on the 5 minute to begin with. Now, when we come into this area, we can see here market open. So this was now 9:30 Eastern here. We saw the markets reacting, giving us a huge push to the downside. So this is a key level that had held, you know, multiple times, you know, 2 times over here, 3, 4 times over here, 5 times here, 6 times here, was created back on the 22nd of September. So when we look at this, we want to say, okay, we have a key level just resting over here, right? So what is going on currently at this key level? So now we're now 10 past 10 EST or 10 past 3 UK time. So if we just go now to our ATAS platform, we're going to be breaking this down in terms of the order flow. So the order flow is the weapon of choice that I like to use, right? So this was now 9:40 Eastern. So what we can see here, when we came into this particular market, right, what we saw a ton of aggressive buyers over here. Then we had this big red candle, huge red candle to the downside. So let's kind of break down what was going on. So order flow has 2 kind of numbers you want to focus on, right? So if you think this is a lot of numbers, it looks complicated, it is not as complicated as it seems once you get practice. So what's going on here is we have 2 numbers, and I'm going to break down some of these numbers. So what we had over here is we had 0 for 44, that's important. We had 289 for 448, and we had 450 for 674. So my job, my main interest is to only look at areas that are highlighted, basically. So when we see a lot of blue, in this case we see a lot of red, we see a lot of red over here. So what I want to focus on primarily when I look at these areas is I am interested in something called the delta. So the delta in this case is a very positive. So we see 448 for 289. So we see a lot of positive delta. So we see a lot of aggressive buyers in this region, right? So if I just kind of put this next to the candlestick chart, we see a lot of aggressive buyers over here. So this is what I'm talking about. So here we see a lot of aggressive buyers here, and these aggressive buyers are here. So what we're seeing is we're seeing a lot of aggressive buyers failing to break above this level. So this is showing us it is an area of supply. This is a supply area. The reason it's a supply is because we can see aggressive buyers failing. Now this is the first lesson of order flow. A supply area forms when there are passive sellers present. So I'm just going to write here passive sellers, right? So when you have passive sellers present, this means that essentially we're at a supply zone, right? It's an area where sellers are in control of the price. So here we have a supply zone, right? And we can back this up via the order flow because we can see a lot of heavy aggressive buying over here, which means that the market moved down. We were unable to break above this level despite the aggressive buyers being present. Okay. So now when we go to the 1 minute, we want to pay attention to this, right? So when we come into this level, right, there's a couple of things that can happen. We can either hold this level and we can look for shorts. That was one thing I was looking for. Or if we break above this level, we want to come back into this level and look for longs, right? So how do we know which scenario is going to play out, right? And how can you be on the right side of that? So this is where we continue on with the presentation, right? So now it's about being patient. It's about waiting for price to come to your levels and reacting to those levels. So this was me at 9:34 Eastern or 14:34 UK time. So ES, the level I was looking at was 67.28. So go back to your charts and back test this level. 67.28 was my typo there, key level, right? So it comes down to letting price dictate what you want to do, right? What do you want to do is what price shows you. So we're gonna break this down now. So this is our entry over here. This is my entry. So 13 contracts just above this level. We're going to be breaking down exactly what was going on over here, right? So let's quickly break this down. So this was a supply to demand flip zone, right? So this was a long trade. So if we kind of break down why we were long, all right? So what we had, price came into this level, right? So now that we've come into this level, there's only 2 things that can happen. So if you're a trader who overcomplicates trading, who kind of gets you allow your emotions to get in the way of yourself, try and break it down into a simple thing, right? Once you have your key level determined, you can either look for a break and retest to the downside, or you can look for a break and retest to the upside. Now, I think where traders go wrong is that they don't truly understand who is in control of the market, and there's nothing you can do to replace basic order flow. So if you think liquidity sweeps or breaks of structures or lower time frame fair value gaps are enough, this is the problem you're facing. You're trading without understanding who's in control of the price, which is fundamentally a problem. So what we can see here, we know that this is a supply area, right? Because this region proved it to us. So this is a supply area. So I'm just going to draw a red line over to the right. So this is a supply area. So when we kind of play price on a little bit, what we can see is we can see the zone breaking. So when we see the zone breaking, we can assume that this is an area where those passive sellers are no longer present, right? They're no longer showing up, right? So we can see these passive sellers have slowly been wiped out as the markets broke above this level. This is important to understand. This is the first thing. When it comes to supply and demand, looking at breaks are very important. So now we see a break and we're looking for a retest. So this retest here took its time, but it did eventually pan out the way we wanted it to, right? So we want to focus on what was going on over here. So once we break above this level, right? So this was our break point here. Anything above this level is considered the break point. But for us to confirm, so if we want to go long here, right? If you want to take a break above this level, have your stop loss below this level. And of course, good trading is basically targeting the next level, right? So the next level in terms of liquidity was basically the previous day low and also eventually the previous day high and then previous week high, right? So the previous week high was basically here. Notice how we have equal highs. So this was your next kind of target. But if you want to go long here and target here, right? Let's say this is your target, a 1 to 4. Basically a 1 to 4 risk reward. How do you know you can go long here? So when you have a break and retest, what gives you the confirmation? So every break and retest is very simple, right? We come into a level, we break a level, we kind of retest a level, and then we want to go long. So where does our confirmation come from? So you need to know what was going on in this region. This is the most important region to understand, right? So what was going on here? So this is where, again, we use our ATAS platform, right? So I've got my screenshots of entry from Discord, right? So my entry that day was here. So 67.33 stops just above this level, 67.28. So about $300 risk for a 600. So it's about a 1 to 2.5. However, I closed a little bit early. So my trade as well was from here to here. This was my kind of execution that day, and profits for that day were 532. So that was roughly about a 1 to 1.8 or 1 to 1. Roughly a 1 to 2 R risk reward. So from an R multiple perspective, right? So I'm risking, this is important now, I'm risking basically $300 to make 530 bucks. It's about a 1 to 1.8, 1.17, 1.75 risk reward, right? So I'm risking about 5 points worth of risk for about a fifth, that's about 33 to, so about a 9-point reward. Think of it as risk to reward, not in terms of the monetary amount gained or lost. So my entry was here, right? So this entry, I want to be focusing very specifically on this region. This region here was very interesting. So this was around, so 1040 to 1045, let's say 1040 to 1045. We're going to be focusing on 1, 2, 3, 4, 5. Yeah, these 5, 6 candles over here. What was going on in price that gave us the indication to look for longs, basically? Where did that long bias come from? So again, let's kind of break this down. So when you see aggressive sellers in this region, right? So these were aggressive sellers, again, 1040 to about 1050 area, right? So when you see these aggressive sellers that are present, right? What happens here? So what is going on here? So let's break this down for everyone. Let's get them next to each other. So what is going on inside of this yellow box over here? So this is what's super interesting. My favorite part of trading, and I get fascinated by this, and I love making videos on this, right? So this yellow box here has a ton of aggressive sellers. Now, the reason we know these are aggressive sellers is, yes, you can read the numbers, but with the ATAS platform, with order flow, you can read you can see by the colors, right? So we see dark red, dark red, dark red, dark red, even dark red over here, dark red, dark. For about 10 minutes, we had a lot of negative delta. So what does this mean, right? What does this negative delta mean? So I'm just going to take one number just to illustrate it. So I'm going to take 491 for 192. I'm just going to take that. So this was 491 for 192. So what does this actually mean? So I'm going to break it down in layman's terms, right? So what was going on over here? So very simply, if I bring this high a little bit, very simply, the markets were trying to drive price down. In fact, we came down just below this level. We had multiple kind of rejections here, 1, 2, 3, before eventually bullish prices. So this price action here, this price action here, right? This price action here, it's showing you we have more market participants hitting the bid, right? So we have the bid on the left and the ask on the right. So here we have 491 on the bid and we have 192 on the ask. So there's more aggressive sellers than buyers, more aggressive sellers and aggressive buyers, right? So think about it from a common sense logic perspective. Look at this candle over here, ton of aggressive sellers. Same over here, a lot of aggressive sellers, a lot of aggressive sellers, right? Were these aggressive sellers able to reclaim the zone and break below it? Think about that. Were these sellers successful at their job? These aggressive sellers, right, hitting the bid, 491 contracts at this price. So this was the price on the S, roughly 67.28, 67.27 area. Were these aggressive sellers successful at breaking below the zone? Yes, they wicked below. Were they able to sustain lower prices below the zone? Not really, because we actually broke above here and we broke above the second time, which is where my entry was. So when you're looking at this from a basic order flow perspective, what we can see here, where I've highlighted, right, where I've highlighted in yellow, is that there's a ton of aggressive sellers that were not rewarded, right? So if these sellers were rewarded, we would have seen lower prices. We would have seen a break lower and a break lower, right? So this here did not happen. So when you see this, this is basically a sign that, this is what I like to explain to everyone. This is a sign, right, where what we see is we see aggressive sellers failing. Now, when you see aggressive sellers failing, that means that buyers are in control. Buy limit orders are in control. So this is what we see in this region, right? Limit orders are in control. So this entire zone, so this was from around 33, 67.33 to 67.27. This is about 6-point zone over here. So this zone, right, if we zoom all the way back, if we go to our presentation, right, if we zoom all the way back, so our zone, remember this zone over here that we started with, this zone here, this zone you see here flipped from supply to demand, right? It acted as supply and now it's flipped to demand, right? So this zone here is actually being supported by passive buyers because the aggressive sellers have failed, right? So this is where the buy becomes quite an A+ setup. So these aggressive sellers have failed. Also, if you remember earlier, we had passive sellers over here as well, these passive sellers, right? So these passive sellers failed, these aggressive sellers failed. If aggressive sellers fail and passive sellers fail, there's only one other option. It's to look for longs, right? So again, my entry came after I saw aggressive sellers failing and we break above this level. So by breaking above this level, it shows us that the previous passive sellers previously have failed, that these aggressive sellers have failed. So the entry comes when we break above the level. So again, the entry was at 33, stops just above this level at 29. Again, where do you want to put your stop loss, right? I want to put my stop loss here because I know there's a lot of passive buyers over here, right? These sellers have failed, right? These sellers have failed. We also see a lot of zeros down here, finished auctions here, 66 for 0, 47 for 0, 6 for 0, 43 for 0, 5 for 0. Finished auctions, a 0, in this case on the ask side, represents finished auction. So it just basically means the reversal higher is more likely. So we're seeing a finished auction, which means buyers and sellers are no longer interested in trading at that price. They think it's a fair price. They're not interested in trading at that price. So that's why you can have your stop loss here at 67.29, 67.28, 29, because you can see aggressive sellers failing. So it shows you buyers are in control and it shows you buyers and sellers aggressively are not interested in trading at those prices. It is a finished auction and therefore you can put your stop loss there. Your entry should be just above the zone over here. So notice how this candle broke above the zone, or peeped above the zone. It wicked above, notice how we have aggressive buyers over here, and notice how we break above this zone. So as soon as we see price breaking above this zone, that is going to be your confirmation entry, right? That is your confirmation. So when we go back to the charts now, your entry would be at 33 or 33.4, 33.3, stop loss at 29, 28, 29 area. And you simply want to target the previous week's high, which is this red line up here. This is where you want to be targeting for about a 1 to 4 risk to reward, 1 to 3, 1 to 4 risk to reward, right? So if you got in long here, it was actually a good ride. So yeah, so this is how I didn't catch the entire trade. I think I caught it up to about a 2-hour risk to reward. I think I tapped out here, but this was obviously the scope that you could have targeted, right? So just to sum this video up, right? This is a flip zone. This is what we call flip zone, supply to demand interactive flip zone. So when you're looking at this region, when you're just looking at this from a bird's eye perspective, right? So if we just go back to our presentation here, just to finish off. So this is what I look for in a session, right? So I choose my key levels and I wait for order flow to confirm what's going on at the key level. So basically it was a demand zone because aggressive sellers failed in this region. So this zone was aggressive sellers failing. A ton of aggressive sellers failed, which means buyers were in control. They were responsible for driving price up. Right. Just to finish off, bid and ask, how do you read it, right? So we have a left number and a right number. If I break down this candle here, this was the initial peep. We see set 0 for 70, right? So the left number is the bid, the right number is the ask, right? The bid is the aggressive sellers, the ask is the aggressive buyers. So the left number is sellers aggressively, the right-hand side is the buyers, aggressive buyers. These are what we call market buyers, right? So they're going in with market prices. So the way you want to interpret this in your head is if you look at 0 for 70, it means at this price, so this was around 67.33, there was no aggressive buyers, right? Sellers. There were no market participants hitting the bid. There were no market participants going in with market prices to sell. So at this time, whatever it was, must have been around 11 a.m. Eastern. At this price, there were no market participants hitting the bid. However, there were 70 hitting the ask. So there were 70 market participants hitting the ask at that price, right? 70 contracts to buy at 67.33, which is where my entry was that day. Okay, so that's a quick kind of rundown on the bid and the ask, but you don't want to overcomplicate this and think there are too many numbers to look at, right? This is how simple the entry model is. So if I kind of bring this diagram over, what's going on here, quite interestingly, is that we held a supply, we broke supply here, and we come into this level and we hold as demand to drive price higher. So in this entire process, what's going on is we see passive sellers failing. So here we have passive sellers failing, and here we had the aggressive sellers also failing. So if both of these fail, that means your only option is to buy. So that's how order flow is used with ICT fair value gaps to find key level entries using order flow.